Hello, everyone. As we approach the upcoming US presidential election in November, I wanted to put together a brief video talking about a couple of important points on this topic. We've had a number of questions from clients over the last couple of weeks and months expressing some concern over the upcoming election. And so I just wanted to put things into the proper context and provide a bit of information on the subject. So the three key things that I wanted to touch on, and the first is that politics generally matters less than you might think. So going back historically, the US stock market has generated similar returns regardless of which party holds the White House. And on the screen here, going back a number of years, a few examples of this. A couple that I wanted to touch on. So in the 1990s, the stock market did very well under Bill Clinton, but a large part of this was because of the growth of internet companies during what became the dot-com bubble. And so while the US economy was doing quite well for most of this period, and maybe you could give President Clinton some of the credit for that, a lot of the high returns from the market came from these internet companies, the very high valuations placed on them. And then, of course, that started to unwind basically just as President Bush took office. So he probably shouldn't be blamed for the fact that the stock market declined approximately 50%. You also obviously had 9/11 in there. And then sort of similarly, President Obama took office just at sort of the worst part of the great financial crisis, and the stock market was already down more than 50% basically at that point. So the fact that he had very strong returns, or the US market had very strong returns during his presidency, also there's some good fortune or some good timing involved in that. So looking back to Donald Trump's first presidency, the US stock market gained more than 60%, so a little more than 15% per year, which was quite good performance. And of course, we had a pandemic in the middle of that as well. But it is just important to recognize that really a lot of times people give politics more credit or more impact than it really has, especially in Canada and the US. And this is in part because most of what affects stock market performance, so things like economic growth, which relates to how much companies are earning, and interest rates, these things are really outside of a president's control. And so for that reason, even though President Trump seemed to think that when the stock market was doing well, that was during his first term, that was because of what a great job he was doing. In reality, the stock market or the president has limited impact on the stock market most of the time. The second key thing is to remember that you are invested in companies, not countries. So we might say that you have 20 or 30% of your portfolio in US equities, US stocks, but remember, these are not investments in the US government. These are not investments in the US president. These are companies that happen to be based in the United States. Most of them sell their products and services all around the world. They're very global in nature. But really remember that ownership, those US investments, that's a little piece of Apple and Microsoft and Nvidia and Google, some of the fastest growing, most innovative companies in the world. It's not like you're holding positions in the US Congress or in the president or anything like that. It's a really important distinction to make. And so it's also important to remember that part of the reason we'll continue to likely recommend US investments regardless of who wins the presidency is that the US continues to be a leader in technological innovation and entrepreneurship. And this is really what drives long-term investment results. So it's these companies that I mentioned, the Microsofts, Nvidias, Googles of the world. Those companies will continue to develop new technologies, continue to grow and innovate. And at the same time, smaller companies will also, a lot of them choosing the US, and that's where a lot of this entrepreneurship is. And so those companies will grow over time and become larger and likely become part of your portfolio as well. So this is a really important thing to remember when you're worried or thinking about politics. The third point is a little bit more specific to do with Donald Trump. At the time I'm recording this, he is sort of the odds-on favorite to win the election in November, and obviously especially some Canadians are concerned about that. So it's important to remember that while in a number of ways Donald Trump is an unconventional politician, has some unconventional views on certain things, most of his economic policies are pretty standard practice when it comes to Republican economic policies, and that's generally a combination of lower taxes and less regulation. And these two policies tend to be favored by investors and large companies. So lower taxes mean higher earnings for these companies. Less regulation also tends to result in more growth over time. You can argue whether these things are good or bad for the country as a whole, but I think generally investors tend to like these sorts of policies. And you can sort of see this by the fact that, look, at this point, with a couple months to go, President Trump is the betting favorite to win, and the US stock market is near or at all-time highs. So the US market has done well. It's not like you can tell by US stocks that there's a lot of concern about Donald Trump potentially becoming president again in November. Again, something to remember, rightly or wrongly, Donald Trump thinks that the stock market, how the stock market's doing, is a scorecard for his presidency. He wants the stock market to do well while he's in office because he thinks that means it's proof that he's doing a very good job. So that's something important to remember as well. If you are concerned about President Trump as it relates to geopolitics or the future of democracy or any of those types of things, or some of perhaps his social policies, that's very reasonable. On the economic side and how it relates to your portfolio, I wouldn't be overly concerned. We're not that concerned. Obviously, we're thinking about some of the risks and keeping those in mind, but it's not a huge concern on our end. Certainly, it wouldn't be surprising if there was some volatility heading into the fall as the election approaches. That's pretty normal, regardless of who the candidates are, because there is a fair amount of uncertainty surrounding every major election. But generally, the markets tend to do well after the election, once that sort of uncertainty has been removed. So certainly, if you have any questions or concerns that I haven't addressed, or any comments, please reach out. Happy to have a discussion or talk about this some more, but I wanted to put some of this into the proper context, and I hope you found this video informative and useful. Thank you very much for watching, and take care.